Okay, wanted to share a quick video with you just on a zero DTE trade that I did today. Let me explain a little bit about the setup. So futures overnight were kind of, went up yesterday right after the market, and then kind of went down, settled down, and then started moving back up. And so they were higher this morning, and I was a little suspect of that just because of the situation that we were in yesterday. It was a news event that the market went up, and typically, things fade, when there's just a news event that's not substantial. And so, in any case, as you can see here, the chart. Obviously, you have you're privileged to see the market where it went, right? But obviously, I had no clear view of which way the market was going to go, honestly. And so I was a little bit biased to the downside, but I just didn't know. So in any case, right before this candle right here is really the right before the market opened, it hit a high here, and as soon as the market opened, I saw a couple red candles going down. Again, I had a little bit of a bias that it was going to go down, just didn't know by how much. So I went ahead and put on this trade for a 30-15, 30-20. And so I was about 10 handles away from the market. I use ES, by the way, to trade. So it's a little bit off from the SPX, but in any case, we're about 10 or 12 handles away from the market, and I had a choice of whether to put on the 30-15-20 call spread or a 30-20-25 call spread, and the premium for the other, the 30-20-25, was about 30 cents, and so it was a little low for me to put on, so I decided to go ahead and take the 65, and actually it was 70, at the time, and as the market was going down, the premium went down a little bit, so I put it in for 65, got the fill. Okay, so in any case, as the market went on, we got this little bump up, and I figured it would, kind of test the high here. We didn't really get close. And just to let you know, if we would have broken this, right, I would have taken a loss. Okay, but good thing is that the market continued down a little bit, and so just because reversals in a market that's moving up already are common, I wasn't going to take a full profit on this. I was planning to take about a 20 cent, close the trade at about 20 cents. And so in any case, once we started to see once I started to see these movements, in a trending direction down, I was very happy about that. And still, just being conservative, I went ahead and put a profit target of 20 first, right? And then when we had this bump up again, I said, let me just take 25. I got a good premium going in. Getting out of 25, would give me a good profit. And so in any case, I went ahead and changed that, to close it at 25, and I got a very strange fill. Got one contract filled, very unusual to get it, especially at this level. And when I looked at the premium again on, on my phone, it was about 40 cents. So in any case, call it whatever you want to call it. I did get a fill at 25 just for one contract. And I held on to it, and I really was contemplating on moving the profit target up a little bit, to possibly 30 or 35, because I just didn't want to get in a situation where I had a profit already and have to close at a loss. And so, looking at the movement of the market, I said, okay, it was okay. And on the second tranche down here, I think right around here, I was able to get the second fill at 25 and close the position for a $400 gain minus commissions. All right, just wanted to share that with you and kind of the thought process that I go through pre-market and throughout the trade, and hopefully this was of value to you. All right, thanks a lot.